Jeff, thanks for coming today.
Glad to be here.
It's awesome to have you.
Yes.
So you represent a firm which is now going increasingly global. Tell me about the origin story of Vickers Venture Partners.
We started in 2005.
Yeah?
We are currently in the midst of fundraising for our sixth fund now. So about 400 million under management and growing very, very rapidly.
Yeah?
About 2 years ago, we started noticing this trend of technology becoming increasingly global. So we believe that innovation is a global phenomenon, and we can't hand to heart say that if we invest in a very specific geography, that the technologies we find are best of breed and world class.
Yeah.
So from there, we decided to start going global, and we have just opened an office here in Silicon Valley.
Which you have two fantastic people. Now tell me, what are the roles of your two San Francisco staff?
Well, I'll let them introduce themselves.
So I'm Sin Hong, and my background is in life sciences actually. And so, I like to see Vickers as, I describe it as icicles. Right? We have these deep pockets of expertise, but a generalist interest that spans geographies and trends. So while myself and Dr. Chia here,
and also a specialist in life sciences.
In life sciences, specifically neuroscience.
Okay, neuroscience. And so your degree is in?
PhD in neuroscience from Stanford University.
From Stanford. And you also have a sort of that kind of
generative medicine from Stanford as well.
Oh, okay,
so
excellent.
We're here to build a business. It's really, again, we have that expertise, but we're a global fund. We invest across sectors, across geographies. We're really here to build relationships and get to know the best founders and build a business.
Excellent. Well, it's great to have you here at SOSV and IndieBio. Now, the purpose of the 42 Questions videos is for entrepreneurs who are looking to, reach out to VCs, but only reaching out to the right VCs when they're on target for what the VC invests in. And so we're trying to get a glimpse from the entrepreneur's perspective of what kind of things are of great interest to you, what stage you're investing in, et cetera. So I'm going to ask you a couple of quick questions on that.
Yeah.
What is the sort of check size that you write between?
We're typical Series A investors. I'd say as a first relationship, we'd probably be looking in a sort of 5 million check size range. Obviously, we do anything north of a million up until sort of the sort of low teens. We like to see some initial traction in the business models. So we tend to not get involved too early when there's a lot of sort of technology implementation and execution risk.
So 5 million is a big stake. You're looking for what type of ownership of a company when you're?
It really depends on the valuation of the company. Obviously varies from deal to deal. I'd say the 20% range. Yeah. It would be ideal.
Yes. Everyone's looking sort of for a significant
that's right.
Portion of the business. In the course of a year, from the range of check sizes that you write, how many new investments would you make? How many new companies would you be finding?
It would probably be doing about 10 new deals on top of the follow-ons for existing companies, but probably about 10 new deals a year. We're a global platform now, so we do invest globally. We look for the best technologies we can find globally. Our experience and expertise is in Asia. A big part of what we do is to help our companies open up Asian markets in a way that's our value add to the companies, is to be able to help them in Asia.
To the companies both from Asia as well as the companies in particular, I'd say, coming from, say, Silicon Valley or from Europe to Asia.
Absolutely.
Yeah. How many people do you have that are general partners sort of making those investment decisions and sitting on those boards?
Our investment committee is five partners, but our investment team is today around 20 people across the world. Our largest offices are Shanghai, Singapore. Shanghai looking after the Chinese market, Singapore looking after the Southeast Asian market. But as you can see with my colleagues here, we can't ignore this market for a source of good technology companies. And we're just about to open up London as well.
Yeah. Excellent.
We have been investing in the US since 2012. We've been making investments in Europe, in the US. And in fact, some of our best performing companies in the portfolio do come from these regions as well. And that's the sort of performance that's incentivized us to really grow our presence and investments in these regions as well.
I think in terms of geographies, there's to us there's nothing really off limits. We don't really look at companies based on their geographies. So we look for good entrepreneurs.
Yeah.
We look for
a bit of traction as well.
Good technologies with a little bit of traction.
Yeah.
And basically world-changing impact. Yeah.
Yeah, and what kind of company would feel comfortable, approaching you, knowing that it's of interest? What kind of revenues, what kind of traction would they need to be bringing?
Historically, all the companies that we've backed, none of them have been profitable at the first time with our initial capital. About half of them are pre-revenue. So revenue for us is yes, a good measurement of traction, but not the only measurement of traction. So a lot of the other things that we look for could be perhaps
track record.
Their ongoing conversations with potential customers, how far along they're getting, and on it. Do they have contracts on hand?
So they're all sort of post-prototype with product market fit products, pretty close to product market fit.
Yes.
Yeah.
Yeah.
So where you think that they, with a little bit of capital, you can help scale them.
Exactly.
Yeah.
Yeah.
And I think more recently we're really attracted by the idea of platforms of deep scientific or technological breakthroughs that are addressing the massive global problems, right? And I think that statement really encapsulates everything that we're looking for in investment. We're looking for things that help people live healthier and longer.
Yeah.
We're looking for things that help people live cleaner, things that help people live safer, right? So platforms of innovations that are well protected, that address all these big problems the world is facing, things that we want to see.
Yeah. We should be doing more co-investment with IndieBio because that's what we do all over the place, and in hacks as well. But anyway, we'll see. When you look at some of the most meaningful investments that you've made, or the ones that you think are where you've made the biggest difference to the companies that you've backed, what could you point out one or two examples of companies that have done well for you and done well for the planet?
Sure. So we have a company based out of San Diego called Samomed. Samomed is today a decacorn.
It's a decacorn.
It's a decacorn.
Hallelujah. You like those.
And we have helped the company quite substantially in being able to sort of structure their fundraisers and help them raise substantial amount of capital.
Yeah.
As you know, companies in this space generally have quite a bit of financing needs, and so we've taken on the responsibility to do a lot of that. Samomed is on the forefront of regenerative medicine, and for the first time you now have drugs that are capable of growing things in the body instead of killing them. We tend to like platform plays, and basically Samomed is a platform play, and they found a way to target one of the major pathways in the human body. They have a drug that is entering phase 3 clinical trials in osteoarthritis. Quite a few exciting things happening with that company. Yeah.
Very cool. Very cool. Talking about the sectors that you invest in, what other areas in life sciences would be of interest?
In life sciences,
yeah.
We're basically looking for technologies that, in our view, are platforms and therefore have more legs than just a particular cure for a particular disease, but whatever creates big impact, whatever solves a big problem, or things that would interest us. Yeah.
So you'd look at diagnostics. You'd look at You'd look at other areas if the market is right. Medical devices.
Device drug combos.
We've looked at therapeutics, diagnostics, wellness. Things that tap into the omics revolution, future foods, or alternative food sources and ways to achieve that. Agriculture. I mean, so it really spans. We really love the intersection of computation and biology as well. You know, advances in artificial intelligence and processing power, as well as coupled with this massive increase in biological data and things emerging from that are things that we're very excited in and have invested in as well. So we've invested in a company, Atomwise, in San Francisco, using deep learning neural networks to accelerate, improve the efficiency of, and cheapen the process of drug discovery. We have made investments in therapeutics company. We've invested in a biodegradable plastics company.
Oh.
Those are some of the examples
Yeah.
of things that we're interested in.
Yeah, it's very exciting. Very, very, very cool. What about other areas? You've been investing in other areas. You're continuing to invest in other IT related,
Yes.
and
Yes.
you know,
Yeah.
is it a broad spectrum? You know, of software as a service kind of solutions, B2B, B2C.
So one of the trends that we've spotted in the industry is the increasing cost of customer acquisition, and as
Absolutely.
a result, we tend to shy away from very consumer-centric companies. So increasingly, we like things that are more sort of B2B or B2B2C,
Yeah.
where we're able to leverage sort of other channels on the market to reach out to the end customer.
Yeah.
Several sort of global trends that we see that I think are shaping our investments of late. You know, AI, the Internet of Things, advanced materials are sort of areas that we are looking more deeply and are very excited about.
Very
So
cool.
nanotechnologies or things. So very often the things that we do are in the intersection of several various pieces of technology,
Yeah.
and it's really the ingenuity of the founders that are saying, if I start applying some of these things in certain other areas,
Yeah.
is there a big problem that I'm actually solving? Those
Yeah.
are those basically form the stuff that we're excited about.
Yeah, that's a great strategy.
Yeah.
That's exactly how, you know, I even started my first company. I just looked at a combination of, you know, the latest data storage technologies, the latest computer resolution, and the increased processor speeds. And I said, geez, you could do maps
Right.
on computers, you know, soon enough. And then we started this street mapping
Right.
company, became a couple $100 million company, because we were the first in the world to be out there, because we combined all the technologies, and then we found marketplaces that could use them. The only way startups have a chance at being number one in the world at something is to be inventing new markets.
Exactly.
And so by the combination of these cutting edge technologies, as you were describing,
Right.
you know, and just merging them together and finding those customers, that's how you do it, I guess. So
Yeah.
what does a team look like that's approaching you? Would they generally have, you know, as you said, maybe they've received capital before your check? You're not the first investor necessarily?
We generally are first institutional round.
First institutional.
Yeah.
Okay, great.
So in the typical one, they have received earlier funding, seed rounds or
Yeah.
angel rounds.
Yeah.
But not necessarily the case.
Yeah.
So
Would this be a first-time founder or somebody that's been around the block?
obviously, founders that have been around the block are a little bit more experienced, less execution risk.
Yeah.
But we back first-time founders as well.
Yeah. And would the team be required effectively to have technical co-founders, or would you take two sales guys and whatever? How do you look to technical co-founders?
Very often, I think our companies are technology-driven. And so if I think back, many of the founders are the technical founder themselves. So that would definitely be a plus. Would we back to sales guy with you know, I think
Great
it would depend
metrics.
on their, we don't like to take technology development risk. Meaning to say we like to see technologies that are more or less, you know, proven and you know, not to say, oh, we ran an experiment in a lab and we can replicate that.
Yeah.
That's something I think that is a little difficult for us to get our arms around. Yeah.
Do you want one member of the team to be market facing?
I think that's ideal.
Yeah.
But certainly in some of the companies that we've backed in the past, that hasn't necessarily been the case,
Yeah.
right? So
Yeah.
we're more sort of technology oriented and
Yeah.
than sort of someone that's market facing.
Yeah.
But also the nature of the companies that we back are generally companies that we feel more comfortable about the market. So this is to the point of, are they solving a big problem, an existing problem that the market needs?
Yeah.
Right. So it's almost that, you know, if you don't need someone to sell too hard.
Yeah.
And to convince a lot of potential customers that this is the next best thing since sliced bread.
Yeah.
Right. You know, we
10x
like
benefit.
to invest in technologies that basically sell themselves.
Yeah.
Yeah.
That said, of course, I think if the founder has that sort of commercial sensitivity and awareness, that makes the person stand out. That makes a team stand out from the crowd, rather than just, you know, talking about technology itself. If they are aware of the market and how to have a strong go-to-market strategy, I think that makes a huge difference as well.
There's a lot of different capabilities of being able to tell the story behind the company, right?
Right.
And to tell it compellingly.
Right.
You know, what do you think makes for a compelling story when a founder approaches you and says, "This is what we do"?
Having sat in through so many pitches, I think for the purposes of a demo pitch, I think where you're not able to actually be able to in the short time that you have articulate your whole story, is to be able to articulate what are the key points, right? And to me, I think, you know, the key point is really, what problem are you actually solving? What are you bringing to the table, and what the market opportunity is like there, and then followed a little bit about sort of why this particular team is the best team to address that problem and to solve it.
Right. What size of market would that need to be? Like, you know, so, you know, the company needs to hit what level of revenue for you to even, like, you know, bat an eyelid?
We wouldn't do more work unless we saw a 10x opportunity.
Yeah.
Right. So and with companies this early and coming out of accelerators, that story is not hard to build, right? So but that story needs to be convincing, right? And so there is a problem. What is the problem we're trying to solve? Why our technology is the best technology that's available to do it, and what the team has behind this technology.
Right.
Yeah.
Any last words of wisdom to share with a founder?
One of the things that I always tell my founders, right, is don't get too caught up and lost in the entire business building aspect, right? Focus on where you believe the bottlenecks are. Because those are the problems that when you solve, you sort of open up new opportunities and propel the company forward. So yes, day-to-day operations, there's always fires to fight and all that, but just stay focused on solving what you think the real bottlenecks are.
Yeah.
Right, and build a great team, right? And because that team is going to help you solve your day-to-day problems, so you can focus on building a great company.
Yeah.
Yeah.
Excellent. Well, thank you very much, Jeff.
Thank you. Thanks for
and
having
team.
us.
We'll look forward to doing lots of deals down the line with you guys.
Sure. Thank you.